Good morning, everyone, and welcome to the first Anakazi online conversation. We're excited to host you this morning. As most of you know, Anakazi banking is all about access to knowledge. And so today we're focusing on that pillar as we give you our first online conversation. With us this morning, we have Mr. Mutisunge Zulu, who is the National Secretary for the Economic Association of Zambia. We also have with us Mr. Chungu Kaunda, who is the Head of Investment Banking for Stanbic Bank Zambia Limited. So the topic for today is all about COVID-19 and how it has affected the Zambian economy. But we're also going to get into the granular detail of how it's affecting you as a business owner in Zambia. So sit back, relax, and learn. Thank you.
Good morning, viewers. Thank you for joining us on the Stanbic Anakazi online show. We're joined by Mutisunge Zulu, a renowned economist with the Economics Association of Zambia. So, welcome again, Muti.
Thank you.
Okay. I think we're here to discuss basically the Bank of Zambia in a medium-term emergency lending facility. But I thought maybe before we actually go into that, the details around that facility, which we're trying to basically, I think, demystify through the show, is maybe if you could just kind of help us out with an economic backdrop that's actually brought us to where we are and where this medium-term facility actually fits within some of the interventions that the government is trying to spur ahead in trying to
Okay. So thank you. We're in a COVID disease pandemic era, and I'll give a little bit of background as to what this COVID is. Respiratory flu type, pneumonia, which has crippled the world from a public health perspective. And then this has actually spread to financial markets and economies. And there's never been a time in history when resources have been reallocated towards public health and then at the expense of other sectors of the economy. So started in China. China has already dealt with it. The cases are now north of 4 million as at today, and that's globally. And the US is fighting. Europe is also fighting with this. It has caused health protocols such as social distancing. Economies have actually locked down, and because of lockdown, there's been supply disruptions. So people are not able to export things and import the way they used to because of the same protocols, and this has actually caused economies to then start to shrink. The world is actually focused to recede. Growth focus for the world is -3% for 2020 according to the IMF and the World Bank. This has actually also affected Africa. Airlines are not flying as much. There are travel restrictions. Borders have closed just to curb the spread. South Africa, which is one of the economies that we are very, very conversant with, we import stuff from South Africa. South African airline is not able to fly to any destination in the world right now, except for essential flights. When we bring it back home to Zambia, the South African airline and Emirates are not flying into Zambia, and they usually are more like, say, the most frequent flights into Zambia. So meaning travel is not happening at the same time. So there are a few flights. Airports have closed in Zambia except for Kaunda International Airport. So starting from there, you would see that lockdown is actually crippling our economy. We're not collecting much in airport taxes. Yeah. And at the same time, remember those airlines hire people as well in Zambia. So people are not working. The lockdown effects, let's start from the airport itself. Construction projects have halted. You can't finish Kaunda International Airport. I don't even think they'll commission it this year because equipment like radar equipment that can't be received from China, and same applies to Simon Mwanza-Kapwepwe International Airport. So a number of companies, hotel, tourism industry have actually borne the brunt of lockdown because people are not flying in as much. There isn't that much travel. Occupancies have actually constricted to about 4%, and that's record. And people have been sent home on the brink of unemployment. It's actually very sad. Schools have shut down. Schools service a particular market. So kids are not going to buy shoes from Bata boarding schools will not have demand for supermarkets, groceries, and everything. And gyms did shut down at some point. Some of the partial lockdown effects for Zambia. Zambia has been in partial lockdown for 6 weeks, and the president only relaxed some of those requirements a week ago. But still, we're in partial lockdown. So unemployment is ticking upwards. Activity is down. Aggregate demand is low. Zambia is actually set to recede about minus 3.5% in GDP growth, and that's not going to be very, very good. So that actually triggered intervention by various regulatory, fiscal, and other stakeholders. And one of them was the central bank that came up with stimulus measures. And part of the stimulus measures was the celebrated 10 billion medium-term emergency refinance facility. Okay. The other things that they did, like increased limits for usage of electronic money, so people don't have to touch cash. You can now transact from your phone, and the limits have increased. For corporates, it's actually been uncapped. For SMEs, I think they doubled to quintupled, so the limit is big. So you can make any type of payments using your phone or digital means. So you can see that in this era, digitization has actually become very, very critical. But then the Bank of Zambia then also took a forward-looking view, understanding that credit risks will escalate. Yes. We have businesses, we have large corporates, and then you have your SMEs and you have your MSMEs. All these would be impacted, of course, one way or another. And we're starting to feel some of those effects now and in the coming months. So they came up with this facility. And the other things is they've relaxed capital requirements, provisioning rules. We've seen the Pension and Insurance Agency as well, as come in as well to ask insurers to stress test their books, embrace digitization. People should now start paying for premiums via digital means. People should be allowed to pay for premiums in a staggered and in installment fashion. So you see that there's all this relaxation. But then when such rules are introduced, there always is a gap because a lot of people have been talking.
So this is what I was actually going to ask you next. So you're not wearing your banker hat, but the hat that you occasionally wear as an economist, or regularly wear as an economist. I mean, what are some of the issues, the pertinent issues or questions that are coming out from the market in as far as this line of credit from the Bank of Zambia is concerned, which maybe we as a bank might be able to assist in addressing?
Okay, thank you for that. So first of all, the word 10 billion has been loosely used by technocrats.
Yes.
Some technocrats have made people believe that this is money that has been injected in the economy by the Bank of Zambia. The SMEs are worrying, thinking, okay, if this is money that has been already injected, then how can we queue up for this money and also get a fair share of that money?
Right.
If you infer from the president's speech, the spirit in which he says it is, he says, my grandmother in Chilenje, who sells African polony, business has been disrupted.
Yes.
They need to be assisted. How can barbershops, how can salons, the small businesses also benefit from this 10 billion? But then the spirit in which the president says it in his speech is one where technocrats should now think of channeling those funds to the lowest bracket in society. Yes, when you talk about commercial banks, the notion is you're going to look at the big corporates, which is where you come in.
Yes.
But then the question is, there is an MSME there, a micro, small scale, medium entrepreneur, and they're thinking, how are we going to benefit? If I go to Soweto Market, how will my grandmother that's going to stand there and is feeling the pinch of this whole, COVID business related effects?
Okay.
So maybe...
So maybe I think maybe the starting point there is to start unpacking how the facility has been structured.
Okay.
First of all, it's a 10 billion kwacha has been made available by the central bank to financial service providers. Further guideline goes on to say that of that 10 billion, the central bank expects that 60% of that 10 billion, so basically 6 billion, will be channeled towards what they're calling the priority sectors.
Okay.
Those priority sectors are the priority sectors under the 7th National Development Plan. So the intent is that 60% of that 10 billion, 6 billion, goes towards those 4 priority sectors. The 4 priority sectors being agriculture, tourism, manufacturing, and energy. And those have been chosen because, as I mentioned, they are the priority sectors identified under our 7th National Development Plan, on the basis that they can spur on economic growth, and they employ a significant amount of people in the economy.
Okay.
The other 40% is for what Bank of Zambia is terming non-priority sectors.
Okay.
And that's where basically households like your grandmother who has a fish shop in the market, that's where they sit.
Okay.
So the line is available to everybody, but I think first of all it's just to understand that those are the sectors that the line is meant to be deployed towards.
Okay.
Now in terms of as that money is deployed into those sectors, another thing that I think where people have not been clear is the actual use or permitted use of proceeds.
Okay.
And there are basically 3. So the first one is where, as a bank or a financial services provider, you can access the line,
okay,
and you can deploy that a line that you're provided or you're able to secure from the central bank towards new loans,
okay,
to fund new transactions. That's the first use of proceeds. The second use of proceeds is where financial service providers will be able to refinance existing loans that sit on their books.
Okay.
So refinancing in the sense that they'll have the ability to reprice those facilities.
Okay.
Because we're coming from a premise right now where the average lending rates in the country are sitting at around 28%. And that's primarily off the premise that a lot of financial service providers typically fund their loan book with short-term placements,
okay,
which are usually pegged against government securities, which we know are running at quite high levels at the present moment.
Okay.
So accessing this Bank of Zambia line comes in at a concessionary price of about 12.5%, which the bank is now able to then on-lend towards new loans at a much cheaper concessional rate than what the prevailing cost of funds is in the market.
Okay.
Secondly, it can deploy it towards refinancing of existing exposures. And then thirdly, it can use it to actually restructure existing exposures. And restructure can come in various forms. It could be a currency restructure, converting a loan from dollars into kwacha. It could be a tenure restructure where we actually elongate the structure, as well as also passing on the pricing benefit that comes from the line.
Okay. So there's been this, there was a statement that the Minister of Finance uttered a week ago, bemoaning the low uptake of these facility by SMEs.
Yes.
And then as EAZ, we also ran an econometric model,
Yeah,
to just get to understand that is there a correlation between the COVID relief packages that we've seen you advertise, for example, on your social media page,
yes,
and the medium-term facility. And then what I get from your explanation as well, which I also agree with, is that there is an opportunity for interest rates to climb down if this facility is effectively used. So would it be right to assume that to the SMEs out there,
yes,
who think that, okay, interest rates are high in Zambia, if they come for these facilities, would they be priced at lower rates than previously?
okay. Thank you, Muti. That's a good question. So the Bank of Zambia has not been prescriptive or restrictive. Let me say more so restrictive.
Okay.
In terms of how that facility will be priced. There's no cap to how much banks can on-lend or reprice or restructure. The Bank of Zambia will provide that line to a financial service provider at 12.5%. If a financial service provider prices within a certain band of, I believe, 5%, that financial service provider will be eligible to go back to the central bank and access an additional limit above what it would have qualified for at the time of its application.
So it's like a redraw. They can go and redraw.
They can go and redraw, or tap, or they can tap up and increase their limit. So there is no restriction in terms of how much you'll be able to on-lend the facility at. But I think the whole premise of the emergency line, as well as some of the other COVID relief measures that the central bank has introduced, for example, you can restructure a facility as long as it was performing prior to April 2020. And that restructure, the facility will basically not attract an adverse reclassification from a provisioning perspective from the central bank. So they're providing those type of reliefs, which don't necessarily require that you use the emergency credit line. But again, just going back to the spirit of the credit line, the spirit of the credit line is there to complement even efforts that the banks such as ourselves are doing, where we're providing relief without even the Bank of Zambia a credit line. For example, we can give capital relief. That doesn't require us to access the Bank of Zambia credit line, because that's on our existing facilities where money is already out of the door. These facilities are running. Now, why are we providing that relief? We're providing the relief because we're trying to cushion the economy from the shock that's going through. So the emergency line again is there to complement those efforts. So to answer your question in a short summary, I think it would be beneficial to actually on-lend at a concessionary rate. We should be able to pass on that benefit to either new clients or our existing clients who are currently have exposures to us.
So there's another area, a gray area.
Yes.
If as ESU we've looked at the guidelines, and we've noticed that on one end there is this credit line, and would like to believe it's like a credit card, so you only draw on it in emergency circumstances. But the motivation is that the banks have also been given relaxed capital and provision requirements, so more like a trade-off. So if banks have been given a stimulus to onward lend, refinance and restructure, the average SME out there is also thinking to say, you're advertising for relief packages. How different will this relief package be from the normal financing that they would have come, and are they also going to get a little bit of relaxed requirements? Will the same credit provisions still apply?
So first of all, in terms of the credit process, it fundamentally will not change. For the simple reason that there is no risk participation, or there's no risk being shared between the central bank and the financial service providers. What's happening here is that the central bank, like any other external or third-party lender which financial service providers deal with, is providing a line of credit to the financial service provider. Off the back of that financial service provider being provided that line of credit, the central bank actually requires that financial service provider actually provides security against that line of credit. So there's no risk participation in that. As far as the central bank is concerned, it's taking credit risk on the financial service provider, not the ultimate beneficiary. So like with all other lines of credit, or even when we utilize depositors' money, for example, to on-lend to borrowing clients, it will still be subjected to a credit policy. the credit, the credit or the credit and business case will still need to stack up for the bank to on lend.
Okay.
And I think again that again ties into the spirit of the central bank in itself, stating to the financial service providers that your qualifying criteria in terms of limit or quantum will be based on your performing book as at the end of December 2019.
So Zambia is your home and Stanbic drives her growth.
Yes.
What is Stanbic's commitment to the SMEs and the MSMEs in this COVID period?
Okay, no, thanks for that question, Muti. No, our commitment is there and it's real. We've already sent out notices, public notices to our clients that during this period, we are offering COVID relief packages just to help our clients navigate the challenges that they're currently facing on account of COVID. So that we're doing without any external interventions, more so in the case of the facility that we're talking about that the Bank of Zambia has put out to the market. So in the immediate term, our doors are open. We're speaking to our clients and we're trying as best as we can to help them through this difficult period by providing some form of relief, whether it's capital repayments or interest repayment holidays. That's our current focus at the moment. And that relief will probably in the initial stages will probably be for about 3 months. But adding on to that and bolstering onto that, we're quite committed to be there for our clients in the long term by being able to offer a more longer term and stable and sustainable solution. So in that regard, we will be accessing, or we will be making an application to the central bank for that funding line. So thank you, Muti, for those questions. Actually, it's good to hear what stakeholders in the general market are thinking and are feeling, because that also help us as bankers in trying to navigate and shape the way forward for our clients. Maybe I'll just end it here by maybe throwing a question back at you by getting a sense from you what you believe the impact, whether positive or negative, of our subject matter being this Bank of Zambia medium-term emergency lending facility will be to the sector and the economy at large.
Thank you for that. So clearly it will spur growth. That is our view. I want you to look at it this way. It's this stimulus is ideally what people should have been expecting in the MPC meeting. So it's like it came a month earlier. That line in itself provides an opportunity for institutions to reprice their balance sheets. And as such, there is that opportunity for interest rates to come down. Remember, the issue around the Zambian market has been that interest rates are high. There's been lack of liquidity, and this provides that liquidity which is needed. If you look at your Business Pulse, your Purchasing Managers Index, one of the key persistent themes for the whole of last year was lack of liquidity. So COVID comes with its shocks, which then distort businesses, but the line provides an opportunity for businesses to still survive. Yeah. So the focus by most SMEs in this period will not be expansion, but survival. Correct. That's why even economies right now are more focusing on public health, and growth will then come secondary because of that reallocation. So it provides an opportunity for SMEs to survive and big businesses. We also take cognizance and we appreciate that big businesses are also covered. Why we talk about big businesses in an SME discussion is because, remember, these big businesses, for example, the mines, have downstream effects. They give contracts to smaller businesses like the SMEs. Yeah. So we can't talk about SMEs in isolation and not look at the larger corporates. Right. So the health of the large corporates also dictates the downstream effects to the SMEs as well. So we're very optimistic and upbeat. Look, this is a systematic issue across Africa. across the world. But then it is good to even note that further, the guidelines from the central bank state that if need be to revise that limit, they will look at it if demand does shoot up and if these COVID effects do deepen. So it actually provides an opportunity for growth in a suppressed environment. For all you know, we are actually even optimistic that the minus 3.5% growth recession that was being predicted by the IMF might not even get to that level. If this is operationalized, well, look, there will be a slow growth. We could actually even be in the positives, maybe between 0 and 1%. Yeah. But what would determine that is operationalization and how effective this will then be channeled. So we feel as an association that there must be deliberate efforts to get that liquidity to the SMEs. And the focus should just not be on the corporates. But if the SMEs do get this funding, then we are very upbeat that we would have weathered some of the COVID credit risk effects. Okay. Thank you.
And then, sorry, I just had a follow-on question actually. Okay. And then now to the sector as a whole, banking sector as a whole.
Yes.
What effect, if any? I mean, you spoke about a lack of liquidity in the past. Mm-hmm. But what effect, if anything, will or can this line impact our traditional sources of funding? So in that regard, I mean, we've typically been funded by short-term money as banks. Mm-hmm. We rely on wholesale deposits.
Yes.
And those wholesale deposits are the ones that actually typically fund our loan books.
Okay.
So this line comes into the market, liquidity comes into the market. Do you see the funding source pool shifting? And then what happens to players such as the wholesale depositors who were the traditional providers of liquidity to the banks? Okay. What are your views in terms of pricing on fixed placements?
Okay, so thanks for that. So there will be a shift. We'll see some lines reducing, but then ultimately, like we said, that opportunity between where your yield curve is and the 12.5% will then start to force interest rates down. But then there will be a ceiling. The cap there is government borrowing. So government borrowing might then slow down the pace at which interest rates will then come down. Instead, in terms of the banking sector itself, COVID credit shocks will still continue and credit risks will still remain elevated. And that's the reason why the central bank did step in to come up with those stimulus measures. So in terms of, say, credit impairments, we expect that impairments will definitely go up because the models that are used in balance sheet management are financial reporting standards. So of course, we expect to see some an uptick in credit impairments, but and then your usual lines that give banks, say, a lip, like investments in government securities, there will be a shift from your usual investment income by locking up liquidity in bills and bonds to more like trading income. Because remember, when your yields start to fall, then interest rate trading in mark-to-market P&Ls would start to show. So there will be a shift in incomes from the top line to the bottom line. But all in all, we are upbeat that at aggregate level, the banking industry is well capitalized and well vested to cushion these COVID effects. And if we've done our own deep dive where we've looked at top banks, including Stanbic itself, are well capitalized to cushion these shocks. And an understanding should also be that much as banks are in business, there's a social cause as well, because now we're looking at the economy in aggregate. There are those sectors that we might deem risky, that the bank would be deeming risky to go in, but the social cause aspect, there has to be that trade-off. And we are happy that the central bank even prescribes by coming up with those quotas to say, if you want to access this quota, 40% should go to here and 60% should go to there. It's going to be a tough year. 2020 is going to be a tough year for the banking industry, not only the banking industry, but across the sectors. But we can give thumbs up to the central bank and the authorities for coming up with whatever measures that they've put in place to spur that growth. So in a nutshell, that's what we expect to see in the banking sector.